Coming up on Market to Market, world leaders defend globalization in the wake of U.S. free trade uncertainty. And the history of old iron is revived through sibling rivalry. Those stories and market analysis with Ted Seifried next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, November 25 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. As you gather at the Thanksgiving table, look around. Your relatives may be in a different home soon if this month's housing data is any indication. Last month, Americans bought dwellings at the fastest rate in nearly a decade. A stable job market and historically cheap borrowing costs help fuel the existing home sales market. The EPA announced an increase in renewable fuels volume requirements. RFS totals for 2017 are pegged at 19.28 billion gallons, up 6% from last year. The Dow Jones has set a record 7 times since the election of Donald Trump, including Wednesday's close over 19,000. Even with weak farm and construction sales, machinery giant Deere & Company posted a net income of $1.5 billion to put a cap on its fiscal year. The results topped analysts' expectations and pushed the stock price higher. Agricultural businesses like Deere & Company are looking to overseas markets for new sales opportunities. Emerging economies may be harder to reach as President-elect Trump looks to follow through on a campaign promise to make trade more fair for the United States. Josh Bittner reports.
When it comes to trade, I believe that the answer is not to pull back or try to erect barriers to trade, given our integrated economies and global supply chains that would hurt us all, but rather the answer is to do trade right.
President Obama joined world leaders of the Asia-Pacific Economic Cooperation, or APEC, in Peru early this past week in a pushback against protectionism following Donald Trump's recent U.S. electoral victory. The 21-nation summit called for continuation of free trade agreements despite Washington's murky international future.
On trade, I am going to issue our notification of intent to withdraw from the Trans-Pacific Partnership, a potential disaster for our country. Instead, we will negotiate fair bilateral trade deals that bring jobs and industry back onto American shores.
This week, the president-elect reiterated his pledge to gut a centerpiece of Obama's foreign policy pivot to Asia.
Not going to happen.
On the campaign trail, Trump's vow to scrap TPP drew support from American labor organizations and some agricultural groups like the National Farmers Union, who earlier this month commended Congress for refraining from a last-minute vote in order to re-examine the pact's terms. Trump also has threatened to slap steep import tariffs on Chinese goods and renegotiate the North American Free Trade Agreement, or NAFTA, to better favor the United States. APEC leaders conceded the main obstacle to free trade agreements around the world is the growing frustration of those who feel left behind by globalization.
It is fundamental that world trade grow again and that protectionism be defeated. There is unfortunately in the world, and we see it in recent elections, not only in the U.S., also in Britain, protectionist tendencies are taking over.
Chinese officials have said more countries are looking to join a China-led alternative trading bloc in the wake of U.S. uncertainty. But critics say the Regional Comprehensive Economic Partnership, the Middle Kingdom's alternative to TPP, is unlikely to include provisions on key issues like food safety, labor, and the environment. Japan's prime minister called TPP meaningless without U.S. participation, while New Zealand's reaction to Trump's announcement was mixed.
A lot of alternatives that are available. One is that the other 11 countries go forward. But look, in the end, we can't control that process. He campaigned against TPP. But the United States isn't an island. You know, it can't just sit there and say it's not going to trade with the rest of the world.
For Market to Market, I'm Josh Bittner.
Rivalries can be as simple as who gets the final drumstick at the Thanksgiving table or who will win the Iron Bowl between Alabama and Auburn. A good competition extends to the family farm as siblings try to top one another in the renovation of old pieces of family history, classic tractors. John Torpy explains this rivalry in our cover story. On the outskirts of Dixon, Iowa, the Miller family farm is home to an exceptional treasure of tractors. It began as most tractor hobbies start. In a way to honor his father, Kevin Miller began restoring the family machines. Little did he know the love of restoring would spread like wildfire through his children, producing a collection of unmatched, one-of-a-kind tractors fueled by friendly sibling rivalry. Kevin Miller's love of tractors started before he could say the word. Watching his father work on these mechanized beasts in his workshop, his eye was on the prized Oliver 88, the iron pen that started writing the Miller's agricultural story.
As a small child, I loved tractors, and I pestered my parents for years. When can I drive that Oliver 88 by myself? And I finally got an answer that I could start driving the tractor when I turned 10. And I just could not wait. It was amazing, you know. I'm big enough to drive it, and I love driving it.
When Miller entered 4-H, he was firmly set on restoring his first tractor. One tractor turned into 3 in a short period of time, but after those were done, his passion for restoring and collecting faded. One tractor was put to work on the farm, the other 2 were parked in a shed and forgotten. Eventually, he sold all 3. While Miller's passion for restoration faded, it did not fade away completely. With the birth of his son, the drive to fix old tractors fired right back up.
When I had my first son born, and then he grew up to be in 4-H age, I started him on it. I said, because I loved it. And so he started it and did one tractor, and he liked it, so then that progressed to the next one. And my daughter thought she was missing out on something, and so she got a tractor, and pretty soon it was a family affair.
Fast forward a few years, and Miller is very proud of his tractor restoring trifecta. His love of the hobby is reflected in his daughter Megan and sons Jacob and Patrick. Through grueling hours in the shop, all 3 have found their favorite make and model of tractor. Patrick is a mini man, favoring the energy yellow painted machines that are known for their reliability.
This is Prairie Gold number 2, technically. There's 5 colors that Minneapolis Mulling would have used. This would be the second one, Prairie Gold number 2. Prairie Gold number 1 was only used a couple years in the late 30s, if I remember right. Prairie Gold number 3 is a lot oranger than that.
For Megan, her diverse restoration resume is long, but when asked about her favorite tractor color, she is a daddy's girl.
My dad and I both favor red. I started out with a 1066 for my first tractor as an international, and then I moved to a 1566, and then for my last project as a 21-year-old FFA'er, I wanted to do the 1456. That was like my dream tractor all over the years, but we couldn't find one, or it was too far away or whatever, but my dad made sure to get me the tractor that I wanted for my last year. It was pretty cool to get that tractor. And I got reserve grand champion at the Iowa State Fair with that one, and that was the highest award that I had gotten by myself on a tractor ever.
Kevin noticed his daughter's desire to be working with the boys at an early age.
At the beginning of her restoration career, I'll put it that way, she restored my dad's Oliver and a John Deere, and She did a case with her brother, but she was always the international girl. You know, as she got on after a couple years, she just loved the internationals. Her favorite color's red, like mine. And so she wanted a red tractor, and I think she liked the gold contrast with the red. So she was in it. We always call her the international girl, and I think it was just that gold contrast she liked so well, and that's why she wanted one.
They paint the whole hood gold, and then when they wanted to actually sell them, they'd send them back to the factory and repaint the outside red but leave the underside gold. So that's how you know you got a gold demonstrator. So these 3 tractors are all golds.
For Jacob, green is the color of his hobby, but it has nothing to do with antlers. And like his older siblings, perfection is the key. Not just the tractor, but every part of its story as well.
Well, this one is a 1550 high crop diesel. There was not many made of them because it's such a small tractor, and 1550 and 1555 diesels as it is are really hard to find. And well, what's really unique about this one is the high crop factor is that it's a row crop, but it has a lift kit on it. So it has, I call them drops on the back. So a chain goes around to the bottom, which hooks up to a different axle, which boosts the tractor up in the air. It also has a row crop front end, but it also has a back support on it so that it can support the longer knees so it can sit higher in the air. So it's kind of a mixture between a high crop and the row crop front end together.
Despite their differences in color preference, the tractor trifecta all agree that hunting down and finding the rare and unique machines is the best part of collecting. And the more rare, the better.
It's a 1955 Heritage. Obviously, it's a little different from the rest of the Olivers you see around here because it's red, white, and blue. But this one is actually only one of one ever made. We got it home and it had 5 gallons of water in the engine. It looked like it got beat to death. I built it all the way back up, brought it to the state fair, competed with it, and luckily won first in my class. So it means a lot to me.
And what means a lot to Jacob means even more to an extremely proud father.
Very proud of them. All these tractors in here, there's only a couple that they didn't do. The rest of them, yeah, Patrick, Megan, and Jacob all did, and they put a lot of sweat in them. And you know, I'm not saying there wasn't some bickering, but then they'll pull together and help support each other. And for them to do all that, it is quite gratifying for my wife and I, and just a family deal.
Next, the Market to Market Report.
We're producing this episode of Market to Market on Wednesday to allow those who bring you this program each week a chance to spend Thanksgiving with family and friends. For the week, March wheat lost 2 cents and the nearby corn contract improved 6 cents. The soybean complex was led by demand for bean oil and meal as the January contract jumped 41 cents. December meal rallied higher by $6 per ton. In the softs, March cotton declined 68 cents per hundredweight. Over in the dairy parlor, January Class 3 milk futures soured by a dime. The livestock sector moved mostly higher again this week as the February cattle contract added $1.95, January feeders lost 7 cents, and the February lean hog contract increased $1.38. In the currency markets, the U.S. dollar index continued in 2003 territory, improving 48 basis points. Crude oil, which helped drive the Dow this week as possible OPEC cuts seemed more likely, rose $1.60 per barrel. Gold dropped again, this time by $19.37 per ounce, a 9% drop in 3 weeks. And the Goldman Sachs Commodity Index gained 12 points to finish the week at 371.35. Here now to lend us his insight on these and other trends is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Hey, the pleasure's mine, sir.
Well, let's jump right into this. Let's talk about the wheat market. We've been saying essentially the same thing in wheat.
Yep. Huge
supplies, lackluster demand. When do we get something new to change this conversation?
You know, you're right. It's a broken record. The thing is, it takes a lot of time to dig out of a situation that we're in right now and literally dig out of these massive supplies that we have, both here in the States, but also abroad. Low prices fix low prices over time. So we need to see acreage continue to decline, not just here, but also globally. That's going to be the sticking point. You know, we can react to that pretty quickly here. but India, China, are we going to see Australia? Are we going to see declines in acreage there or not? Over time, possibly. I think what we need, and again, a broken record, is we need a production issue somewhere. We saw conditions decline slightly here. So we'll see what happens with that. But you look at what the wheat market has done, and it's been very sideways for almost 3 months now. So you wonder if we've really factored the worst of the news in right now. You look at exports are up pretty substantially year over year. That higher dollar is a limiting factor, but if we're not going to go lower, you look at the amount of open interest that is controlled by the fund's short position, and you wonder when these guys might want to throw in the towel and say, hey, we're not making new lows, our positions are not continuing to gain, let's go ahead and get out, take profit in some of their positions probably aren't very profitable. So, you know, if the funds come in and cover their short position, we can get a pretty healthy rally in wheat for no real big fundamental reason. There'll probably have to be a spark to do that.
Some kind of a weather event, some kind of something.
Right.
Now, you mentioned we've been relatively stable in this wheat market, and we have been. We've been range bound between, call it $4.25 and $4.
Yep.
Does that make options look especially attractive for those who have maybe sold some wheat and they want to hedge their bets as we look to the future?
Absolutely. I love where you're going with that. Yes, when you have volatility really drop to very low levels, and this is also the time of year where we suck volatility premium out of options because we don't expect a whole lot of movement between now and, say, February. So it's buying call options or even buying put options, and mainly more so for the soybeans, but even just buying options in general are very attractive right now in order to replace bushels, to replace that profitability potential. And the wheat market's a great one to be doing that in right now.
Well, let's talk about the corn market. We're still finding some stability. We're back up over 350. That's a point that a lot of producers are excited about, though we're not necessarily seeing the basis react very strongly out in the countryside. When is going to be a good time in your mind to sell some cash corn?
Yeah, basis in the West has really been the laggard. And you go back to 2014, it was the opposite. The basis in the West was really very strong. Last year, the basis in the East was strong. This year, basis has stayed flat longer, simply, I think, because of the size of the corn crop that we've had and the fact that we've had 3 in a row. I do think basis improves going into the end of the calendar year as we store grain and lock the bins up tight and don't want to make sales in front of, until the next tax year. I think that basis will slowly improve. It will also help when we start shifting more of our export pattern from soybeans to corn. However, that hasn't happened yet. You look at the last 5 weeks of soybean actual export shipments, and we've shipped the equivalent of a very large carryover in 5 weeks. So when that slows down and corn starts going more full bore, that basis should improve. And I do think that happens between now and the end of the calendar year, and I like the idea of making cash sales in corn when everybody else is paying attention to Christmas and holidays, things like that. That has been a good time to sell corn in the last few years. We've seen a pattern of times to sell corn have been in December, and then again in late May into June. Those are our 2 chances.
Springtime spike. Yeah. If I'm planning on selling some cash grain here before the end of the calendar year, and futures are let's call them stable, up here at 355, do I want to be re-owning that grain that I'm selling, or do I just let it go?
You know, we did that last year. It made a lot of sense, and it did work out and allowed us to make sales on the cash side on that rally into the first week of June without having to worry about our upside potential. That helped, mentally, I think, helped out a lot of the guys that we work with. So I like that idea. I think this is another good year to do that. When you have prices that aren't going sharply lower, there's always the potential of something happening and us going higher. You also have the potential of a South American weather problem. However, I will say this, if you're selling corn at the end of December, I think you wait till January or February, because if South America looks good at that point, we can come back down and that'll be our secondary low. And then in that January or maybe early mid-February timeframe, last year, that was the time to go and buy calls because we had taken all the volatility premium out of the market at that point, and we were down at low price levels. So we were doing that, at harvest and through harvest. We're not as actively buying corn calls at this point now that we've picked up 35, 40 cents off of lows.
Sure.
So we'll see. But again, cash sales mid-December.
Watch that local basis.
And then watch the local basis,
Now, let's take a look at soybeans. That's been the Cinderella story this entire week. Started off Monday, Firecracker Day, rolled into Tuesday. Wednesday kept it going, and we are recording, as we mentioned earlier, on a Wednesday. So, Ted, We're 40 cents higher from Friday to today.
Right.
Where do we go from here in this bean market?
Well, you threw a new wrinkle into that mix today with the EPA and with soybean oil at a point being limit up and closing not far off of it. How much further does soybean oil have to go based on the EPA announcement? That's a great question. I don't know if we have to go that much further until we see what happens to our soybean oil stocks as we move along with the crush, because if the crush is still strong, those stocks can hold up. What we don't know is competition with palm oil. We just saw China purchase a fair amount, a very nice size purchase of soybean oil just on Tuesday. So if we've got both of those things happening, where we've got a higher EPA mandate and China's coming in and purchasing, or anybody, China included, but if anybody's coming in purchasing soybean oil instead of palm oil because of the relative advantage or cost advantage of soybean oil, wow, you could have sort of an interesting story. But I do think today might have been an overreaction, at least until we see how that plays out. And you know, I wonder if soybeans start to lose momentum a little bit here. Now, I don't know if we see a sharp drop between now and the end of the year, because as we said, you know, producers, we're probably going to be pretty tight-fisted until we get to the new tax year. And we've sold probably more soybeans than in hindsight we should have at this point. So we'll see. Other thing you really want to watch out for with soybeans is South American weather. Obviously, this is the time of year.
How does it look so far?
See, that's the thing. You look at subsoil moisture for some of the key areas in Brazil, and while we're not going to say things are dry, subsoil moisture is not nearly in the same condition as it was this time last year for again, some key areas. You look at center-south Brazil, main breadbasket of Brazil. There are some problem spots there.
And South Brazil would be one of those areas potentially affected by a La Nina.
Yeah, absolutely.
So things to keep an eye on as we look out to the future.
And that could really, I mean, you talk about strength in soybeans that we've seen recently. That could really add a lot of strength in soybeans if that were to happen. So keep an eye on that. And that would be the scenario where you don't want to get too aggressive on sales in December if that's starting to materialize. Okay. So you got to keep an eye on that weather before you actually make those sales. But if no weather problem materializes, that's when you look at that.
All right. Now, we've got a lot of great questions from our followers via Facebook and Twitter, but we are going to get to those in the Market Plus segment, which you can find on our website. So, Ted, I want to talk livestock with you. We had the livestock slaughter report. Lowest veal production in history was last October. Putting that to the side, as you look at beef productions, we look at this cattle industry as a whole, is the low end.
Yeah. Well, first of all, PETA's done a very good job on veal.
Yes.
And
yeah, that's an industry that, Yeah.
Is the low end for cattle? You know, I don't really see a compelling need to go in and make new lows in cattle with the current fundamentals that we have right now. We've got a lot of optimism at the moment that as we get through Thanksgiving holiday and we move a lot of turkey off the shelves, it's going to be replaced by beef, and we're looking for beef demand to be good through the holiday season. So that optimism is there. I haven't seen the exports really turn around to the extent that we need them to in order to really get us or continue the rally longer term. I kind of feel like we've gotten to the point where, you know, packers have needed to come up, and you've seen a flurry of cash trade in the last week and even some pretty strong bids here today on Wednesday.
Around 110, where are those cash bids?
Yeah, you saw them creep up from 108, 109, 110. I didn't see any trade before I walked through the door here, but those bids were
And again, we are
up.
reporting on a Wednesday.
That's right.
So we'll see how
So that's impressive. I'll say this, though. I mean, cattle on feed wasn't all that bullish last time around. It was pretty close to expectations. Cold storage was actually quite bearish. We've got a lot of upfront supply. I think we've done the legwork to the upside for now. I'm looking at this as a very nice selling opportunity for the time being. I don't know if we go make new lows, but we've got a gap down there that I think we can go and fill. And maybe we can go test those lows. Either way, sideways trade for a while makes sense to me.
Okay.
Because it'd be a bigger base that we could build off, and then at the later on maybe start to rally.
If exports turn around, get an opportunity.
Yeah, and that's the wild card there. If China, because they had said that before the end of the calendar year they were going to come in a bigger way, and that was about a month ago that they said that. They were going to come in a bigger way on U.S.
Right,
beef.
They approved U.S. beef as an import.
We haven't really seen that, but if that were to happen, second week of December or something like that, that would change my idea of, maybe we have to come back down.
Real quick, Ted, feeder cattle market, are you a seller up in here, or do we have a little more room to run?
There too. I think we're a seller. I think we've had that bounce that we needed. A lot of that bounce started as technical, and then you saw some other things kind of change around, especially on the cash side, that allowed us to come up. But I think we're sitting at levels that probably need to be sold for the time being.
All right. Lean hog market.
Yeah.
Where are we going from there? We're up $1.38, back into the mid-50s.
Hey.
So, have we turned the corner?
I think we may have. There too, for a long time, we've been talking about exports need to save us. But now we're kind of working through, and although, I mean, record kill and so on and so forth, I mean, we do have a lot of upfront pork supply, but you look further down the pipeline and things start to get a little bit less bearish or a little bit more optimistic.
And cold storage, if I'm not mistaken, was fairly bullish on the pork side.
Compared to expectations, it was really quite bullish. So that's great when you have high kill and you still are reducing cold storage. So I'd say that's a fairly positive outlook going forward. I don't think we need to go make new lows in hogs. You do wonder if at some point, because we're getting pretty close to some key technical resistance, 100-day moving average and so on, you do wonder if you get a bigger pullback. And again, maybe you need to build a bigger basing formation before we have that longer-term rally. But I'm getting a little bit more friendly hogs in the long run. In the short run, again, I wouldn't be surprised to see a pullback.
But perhaps the bottom's behind us.
I think the bottom might be in for hogs, yeah.
All right. Well, Ted Seifried, thanks so much for joining us.
Always a pleasure, Mike. Thanks for having me.
That wraps up the broadcast portion of Market to Market, but Ted and I will keep the market conversation going, answering more of your questions during the Market Plus segment, which is available on our website. Also this week on the M2M podcast, a special road trip for the program as we give a long look at the agricultural landscape. And join us again next week as we look at how a plan set in motion decades ago is paying it forward to a new group of farmers. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.